What's up, everyone? It's April 8th, 2025. Had a big day in the markets. The range has been huge. I think it was like 350 points when last time I checked. 366 points. Wow. Pretty crazy time to be a day trader. I want to give a quick shout out to everyone following me, guys. I know a lot of you are new. I do these breakdowns every day, Monday through Friday. I do a breakdown of the E-mini. I talk about micro channels, trade setups, and price action. And give a quick shout out to all the members as well. Thank you for joining. I appreciate you guys. I'm working on new members videos. I'm working on getting the trends videos back up and running. I took Systems Academy last year, and I was busy in the beginning of the year, but I have a lot more free time to work on the YouTube channel. So if you guys like what you see, join the Discord below and let's talk. You guys are sharing some great charts in the Discord, so I appreciate all of you. The more charts you guys share, the better we can all get. So here's the daily chart. Man, yesterday was that pullback. I was really skeptical of saying this was climactic because every time I said that, the market went lower these last couple of weeks. So we just stuck to what we know. This was Sean to get a second leg down, and we could see that today. We had a trendline break. Talked about trendline break in the previous couple of videos, so check that out if you're wondering what I'm talking about. So there's two types of leg break. There's two types of ways to count legs. And you can't pick one or the other. One's not better than the other. Both are important. We have both of them on the screen right here. So the two ways to count, there's several ways. Here, see how we have multiple bear bars in a row and we have a shallow pullback? Okay, that's the start of the second leg because it's an opposite bar. That's a pullback, and this bar actually broke the trend line. But let's use today as an example. So now this is actually a better example. So we have a leg one, pullback, leg two, pullback, leg three, but no trend line breaks. The leg three is hidden in the bull bar. But now look at today's price action. It broke a trend line. So that is also the start to an overall bigger leg. Generally, legs can have, we generally see three legs in one direction. And within those legs, we see three more smaller legs. So this is a good example. We can say this is one leg, but look within the leg. Leg one, opposite bar. Leg two, opposite bar. Leg three goes sideways. And now we have another big leg. Leg one, pull back, leg two. The second big leg is also made up of three or four legs. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. And look, now are you guys catching the flow? We have another big leg, third leg down. Leg one, pull back, leg two, pull back, leg three. Today was a bear trend day. Generally, after we see three legs down, we go sideways. So yesterday was completely sideways, but I'm looking for a day that shows. Okay, look at this day here. We have one big leg down, leg one, pull back, leg two. But look what happened after the third leg. Leg one, pull back, leg two, pull back, leg three. We rallied. That's range bound price action, tested the breakout point, sold off. So that's the market structure repeats itself. It starts out with a breakout channel, then we have an opposite bar, which is the channel phase. That shows two-sided trading. And after that, once we get into the third and fourth legs, we go sideways. For the most part, the exception is small pullback trends, and today ended up being a small pullback trend. I'm not trading right now. I just gotta take a little break from the markets and clear my head from. I ran up a bill this last couple months of trading and I didn't get a payout, so I'm just breathing. And then I'm gonna attack pretty hard at the end of the month. I'm gonna start stacking accounts back up, and the goal is to get anywhere from 8 to 10 accounts all sitting above payout threshold. And then I'm gonna be making 150 to 100 bucks a day, and that's over $10,000 a month. It sounds steep, but from a systems perspective, trading a system, it's very doable. I like to say a good system, the human is the weak part in the system, and within my system, I was the weak part at the time because I was trading the system, but I was betting way too high, and then I don't know where this volatility kicked in, and I got whipped out on a pullback. So that's where I'm at on trading. I want to be transparent with everyone. I have a lot of new followers, so I want you guys to know who you're following. I study Al Brooks, I study Ali Morningsari, and from the psychology perspective, I study Randy Howell. I've taken all three of their courses over the years, and yeah, I'm looking forward to hoping you guys get profitable, I guess, for lack of better words. Anyways, let's get into it. Gap up, bar one, bear bar two, bear bar closing above its midpoint. Not the best for the bulls because they want to see a continuation right away. Then you see bar 3 is an inside bar. Bar 3, inside bar is the only bar it's not breaking out, and it's best for a trader to get out of their position. If it's early, you can test it out. You might be short on 18, you see an inside bar. 19 is not an inside bar, but you might want to hold that. That's 20 points. That's actually not bad. Okay, so I don't want to stay on topic. Bar 4, rally sells off. There's a rally in that leg right here. So what I'm counting is leg 1, pull back leg 2, pull back leg 3, climactic leg 3, or you can say leg 1, pull back leg 2, second leg trap, leg 1, pull back leg 2, pull back leg 3, lower high, higher low, excuse me. Bar 5, bull bar closing on a tie, follow through bar 6, 7, and 8. Bars are shrinking, and then we have a good tail on 8. Market goes more sideways, and we have a high one in trading range. I could definitely see the argument for this being a leg 1, pullback leg 2, and maybe some of you bought these pullbacks. And I could see myself doing that at a time. Right now I trade a system, so the system would have saved me from that trade. And I actually wouldn't have a trade this morning. So my first trade would have come along bar 27. I would have got filled on bar 27 and I would have scalped out real quick. The reason it's good to trade a system is because you can start to build an expectancy. The markets are usually 50-50, 55-45. Rarely is it 60-40. The markets are really 50-50 almost all the time. So, you're trying to make money off a coin flip. This is why it's important to, and I'm not saying I don't want to be a discretionary trader. I do want to be a discretionary trader, but the path to discretionary trading is through systematic trading. But let's get back into it, because sometimes people ask me why am I trading a system, and that's the answer. Bar 8 actually is also a trend line break. So we don't have an opposite bar, but we have a trend line break. So that's the start to leg 2. Leg 1, pull back, leg 2, opposite bar 9. Leg 1, pull back, leg 2, pull back, leg 3. Now we have 3 legs. High 1, and then leg 3 is generally a better fade. And we see that. Market goes sideways. Bulls are losing momentum. Bulls cannot close a bar above the midpoint. Low close, bear bar, low close. Bar 13 does close above its midpoint, but it has more tail, so it's a trading range bar. Bar 14 is neutral, but it has a line above the midpoint. Bar 15, good bear bar closing on slow. We have been in a bear regime for ages, so this is dangerous. We have good follow through all the way down, 16, 17, 18. 4 bar bear microchannel, good enough to get a second leg down. 19 is it's a tricky trade. I think it's a good trade. The reason it's a tricky trade, I'm talking about shorting 19. It's tricky because you're shorting a gap up. So that's actually not a good trade. It's not a good trade to short 19 because you're on the EMA. The better trade would be scalping here, getting out, scalping. And so then once bears start collecting many bear bars, you can maybe short 36, short 40. So scratch that. That's a skeptical trade because just as much as it sold, it could have popped up with the gap up. Bulls had momentum, but obviously, we see it died down. 20, bear bar closing on its midpoint with a tail. 21, bear bar closing below its midpoint. Good bear close, that's a trend bar. Then we have a bull bar acting as a pullback. 23, trend line break. So there's a pullback going on right here. 24, it's the third leg down. If you're short, I would get out because you're also short on support. Higher time frame EMA. 25, bull bar closing on its high. 26, bull bar closing on the EMA. This is not a good buy. The close is bad after a strong leg down. Best to fade or just wait. 27, bulls rally but get no body. 28, bear bar closing on slow. 29, tail. I lost my train of thought. Excuse me. Did I say bull bar closing on slow? 28, bear bar closing on slow. Market sells off. 29, closes on its high but no body. 30 ends up being a pullback. 32 through 33 is somewhat of a low 2. Excuse me. Got the bulls in my head. Leg 1, pullback. Excuse me. Leg 1, pullback, low 1, pullback, low 2. The problem with this is coming at us. It's coming 31's coming at a better price than 28. So you risk this being a trap and a bull channel. But then we start to see 34, and now you're like, okay, the bears are breaking out again. 35, bull bar closing. Why am I saying bull bar today? Bear bar closing below its midpoint, and it's a trend bar. 36 is the bull bar closing on its high, acting as a pullback. You could be looking for a reversal, but you're looking for a reversal in a bear regime that's has a lot of bear gaps. Remember, when we have gaps, that shows the market's trending in one direction. When gaps are closing, that shows the market's range bound. So there is a gap open here, 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 and that's a nice gap right here. Let me just draw those in for you guys because that was kind of flimsy of me. So gaps show us trap traders. Someone asked me that question in the comments. Like, some of the questions you guys ask me, it's not that I'm ignoring you guys, it's that I can't answer in the comments. I need to post a chart. So if you guys have questions, I would really appreciate you guys adding a chart or a timestamp to it. So gaps show trap traders. There's limit order bulls here. They put limit orders here and the market goes down, and now they're trapped. 36 actually gave these bulls a chance to get out. So they're trapped here. Bulls have a limit order here. 34 is a gap breaking out below the range at the moment. Then you see, so we put an order. So I'm simulating a break-even trade. That's the limit order bulls. Hold on, I did this wrong. This red line right here is limit order bulls getting trapped. Then you see this, and then they buy the low of 35. And then you see how it went to their original entry. So they have two contracts. They make money on their second, breaking on the first. And then look at 37. Look how it sold off. It sold off at their original entry, testing breakout point. So breakout points get tested. 37 is outside bar. What's the context? Outside bars are tricky because they're technically, the literature says they're trading range bars, but the context is right. You could look for a leg down, and I think this context is good because there's 5 bars before 37, so it's just 37 ends up trapping bulls. 38, we have another gap breaking out below the range. Excuse me, I said that I should. Okay, so at 38 we don't have a gap. 38 is breaking out below the range. 39 is a bear bar making a gap. So now we have a gap. We have 3 bars in a row with a gap. I like the short on 40. That's testing the breakout point. 37 sells off. 41, 42. 2 bear bars in a row makes another gap, but it's not the strongest gap because it's bear, bear, bull. We're looking for bear, bear, bear. But nonetheless, the context is good for short. The market is trading within its third leg, so be cautious if you're shorting a new position. If you're adding to your position, I understand. If you're shorting, think about scalping out. 44, bear bar closing out slow, good enough to get a second leg, but now we have 2 bull bars in a row. So look at that. Pullbacks went from 1, so breakout resets the leg count. Pullbacks went from 1 bar, tail, to now we have 2 bars in a row. And yeah, there's a tail, so it's not the strongest. But what it is showing you is bulls got 2 bull bars in a row. Something's happening, and we're in the third leg, and now this gap has closed. Well, this gap doesn't get closed until here. What I'm hinting at is third leg, bull bars are starting to stack. We could be in a trading range soon. 47, 48, bear bars closing on a low. No gap. So now the bears are getting weaker. They went from producing gaps. They went from bear gaps. 3 bear bars to gap. 1 second, I'm about to cough. 3 bear bars gap. 3 bear bars gap. Now we have another gap, but it's a bull bar. And we're in the third leg. And now we have, there's a gap here. And now it's even a weaker gap. It's a bull, bear, bull. And now bulls are getting 2 bars in a row. Do you guys see what I'm saying? How the bull pressure is sneaking in there. It's sneaking up. These 2 bars didn't just happen out of nowhere. It was strong. Okay, strong. Okay, started to get weak. Okay, now we don't have 3 bear bars in a row. Now we have 2 bull bars in a row, and we're in the third leg. So the bulls were sneaking in there. You got snapped out. There's the price action right there. That could tell you something's about to happen. And you could hold your position and make your money back, but this is a hard hold. The range is tough. I hope you guys are trading 1 micro. 70 point snap. But 70 times 3 is like, or 70 times 5 is 300 or 350. It's a $350 snapback. That's tough. And then there is no gap. So now remember, gaps get closed in trading ranges. So look, third leg down, bull bar stacking up, gaps are becoming weaker, and now we have no gap. And then boom, bull bar closing on its high, 50. Bull bar closing on its high, 51. But a bad close. It closes on its high, but it's a bad close under the EMA. 52, 2 bar reversal. Strong enough to get a second leg down, and we get another 3 bars here. Strong to get second leg down, deep pullback, trailing range behavior. Maybe wait for a failure above 58 and you scalp 61, or excuse me, you scalp 59 down to 60. Trend line break 61. Rallies, sells off, a lot more sellers above the EMA. Bears are still selling the EMA. 62, 63 into support. Just wait to see the breakout. 62, 64. I'm butchering it. Sorry guys, I had a long day today. 64. Bull bar closing out high with a tail. It's a bad buy. You want to see like at least 10 bars above. After this much price action, if you want to get long, you're brave, or if you want to get long for a swing, you got to at least see a trend line break, double bottom, and then at least anywhere from 5 to 10 bars above the EMA. We're in a bear regime because we're below the EMA. Then the market spills over. 66, 67, 68, 69, 70. All big bear bars closing on their low. Let's speed this up here. I do like to keep them around 20 minutes. I know you guys are busy people and have your own lives to attend to. So this micro channel shot to get a second leg down. We are breaking out far below the range. Let's see if, oh yeah, it did double, but look at that. The breakout went 1-to-1, it pulled back and then went for 1.5. I guesstimated at 1.5. Let me see. It went for a little bit more. It went about 3/4 of the way down. 1.5 of this range is what I was on about. Nonetheless, this leg was strong to get a second leg down, and it does 73, 74, 75, 76. If you're trading past bar 72, I think you're either looking to make some money back, you're deep in profits, or you're just bar 72, the market can get random. Look at bar 77. You know, that could have just very well happened right after 72. Now we have a lot of selling pressure, climactic price action. Okay, we're in a trading range, so that's okay. But what I'm saying is just be cautious trading past 72. Be cautious trading the first 30 minutes and last 30 minutes of the day. Big bear bars, bigger than we've had since the beginning of the day. So it's climactic price action happening late in a trend, happening late past. It's happening past the third leg. So leg 1, pull back, leg 2, pull back, leg 3. And then we see 77 changing the characteristic for the day. Double top EMA, double top on the EMA. I think the overnight session was sent. Look at that. Bear sold off to the low of this. We went more sideways, and now we're getting that bull breakout. Be interesting to see. I think this is strong to get second leg down. Oh, excuse me, second leg up. Possible deep pullback, testing the high of bar 233. This is the overnight session, so I will be trading the overnight session when I start trading it. I'm just gonna start trading it. I'm just gonna go at it. Anytime the signal prints, I'm gonna take it. All right, guys. As I said in the beginning of the video, if you enjoyed this, join the Discord. Ask me some questions. I appreciate your support. Thank you for tuning in. Thank you to all the members. Thank you to everyone being here since day one. Some of you have been following me for a few years. You know who you are. I don't want to drop names, but you know who you are. If you guys have been following me for a few years, I really appreciate you guys riding with me. I'm also rooting for you. I hope you guys make money. And yeah, if you learned something, share the show. Don't be a hoe, and I'll talk to you guys tomorrow. Have a good one, everyone. Bye.